The EP20 automated system assumes a consistent paycheck arrives on a predictable schedule. For nearly half the American workforce, it does not. MBO Partners' State of Independence 2025 counted 72.9 million independent workers, approximately 45% of the U.S. labor force. The Bureau of Labor Statistics counts 16.6 million formerly self-employed as of December 2025. 52% of Gen Z and 44% of millennials work freelance, per current market data. The EP20 system, 4 layers, automated transfers, fixed allocation percentages, is built for income arriving on the same date twice a month. Applied to variable income without modification, it fails in the first lean month. The biblical framework for variable income was established before personal finance existed as a discipline. It does not assume a fixed paycheck. It assumes a harvest cycle. By the end of this video, you will have the 4-part variable income system, built from that biblical framework and engineered to keep the EP20 architecture running, regardless of what any single month produces. The top financial challenge reported by freelancers and self-employed workers is income instability and feast or famine cycles, confirmed across every major independent worker survey. The pattern is structural. A strong client month produces income that feels like abundance. The budget expands. The next slow month produces the same obligations against a fraction of the revenue. The EP20 automated system fires regardless. If the buffer is not there, the transfers fail and the emergency fund gets raided to cover the gap. The Federal Reserve's SHED 2024 confirmed 37% of adults cannot cover a $400 emergency. Among self-employed workers, income variability creates repeated exposure to this scenario, even for households that earn well in aggregate. Proverbs 6:6-8, wisdom literature. Go to the ant, you sluggard, consider its ways and be wise. It has no commander, no overseer or ruler, yet it stores its provisions in summer and gathers its food at harvest. The ant operates in seasonal cycles of abundance and scarcity. Its intelligence is not in how it spends during abundance, it is in how it stores. The variable income household needs the ant's architecture. The most direct biblical mandate for variable income financial management is 1 Corinthians 16:2, an epistle, apostolic instruction. On the first day of every week, each one of you should set aside a sum of money in keeping with your income, saving it up. In keeping with your income, not a fixed amount, a sum proportional to what actually arrived. When income is high, the allocation is high. When income is low, the allocation is low. The system adjusts, it does not break. The Joseph model from EP18 is the macro version, 7 years of abundance followed by 7 years of famine. Collect a fifth during abundance for distribution during scarcity. Variable income households live this pattern in compressed time. Every strong month is a year of abundance. Every slow month is a year of famine. Ecclesiastes 11:1-2, wisdom literature. Cast your bread upon the waters, for you will find it after many days. Give a portion to 7 or 8, for you know not what disaster may come upon the earth. Diversification of income streams, provision for the unknowable lean period. Not the abundance of summer consumed in summer, stored forward, returned when needed. The framework has 3 texts. Proverbs 6:6-8, store proportionally during abundance. 1 Corinthians 16:2, give in keeping with what arrived. Ecclesiastes 11:1-2, provision for the unknown ahead. Those 3 principles produce the 4-part variable income system. The 4-part system. Part 1, the income floor. Review the last 12 months of income. Identify the single lowest month. Apply a 10% downward adjustment for conservatism. That number is your floor income. Build the entire EP20 system around the floor, not the average.
All automated transfers, fixed obligations, and minimum debt payments must be coverable from the floor. If they are not, reduce fixed obligations or increase the income floor before proceeding. Part 2. The Income Buffer Account. Open a dedicated HYSA, separate from the EP18 reserve, labeled the Income Buffer. All variable income flows into the buffer first. The buffer pays you a consistent transfer equal to floor income on your designated payday. The buffer absorbs the feast or famine cycle before it touches the EP20 system. Strong months fill it, lean months draw from it. The EP20 automated transfers fire against the consistent floor paycheck, never against the variable deposit. Buffer target, 3 months of floor income. Part 3. The Surplus Allocation Rule. When a month's income exceeds the floor, surplus allocates in sequence before the buffer distributes anything above its 3-month target. First, EP18 HYSA reserve to target. Second, EP14 Roth IRA above minimum. Third, EP24 debt sequence acceleration. Fourth, buffer replenishment if below 3-month target. Fifth, lifestyle margin. The surplus is not available for discretionary spending until the first 4 allocations are complete. Part 4. The Lean Month Protocol. When income falls below the floor, the buffer covers the gap. The EP20 system runs unchanged. Debt acceleration pauses, minimums continue. The next surplus month prioritizes buffer replenishment before acceleration resumes. Here is the framework stated plainly. The variable income household runs the same EP20 system with a buffer account inserted between the variable income source and the automated transfer schedule. The buffer is the variable income household's Joseph reserve. It absorbs the abundance, it distributes the consistency. The system on the other side of the buffer never sees the volatility. 1 Corinthians 16:2. In keeping with your income. The amount flowing from the buffer to the operating system is the floor income. The amount flowing into the buffer is whatever the month produced. The ant stores in summer. The ant eats from the store in winter. The store is the buffer. The system is the ant's intelligence applied to a variable income household. The floor income is the foundation. The buffer is the store. The EP20 system is the operational architecture. All 3 together produce the consistency that fixed income households receive automatically and variable income households must engineer. Here is how to implement the system. Step 1. Calculate your floor income. Pull 12 months of income. Identify the lowest month. Multiply by 0.9 for the conservatism adjustment. That is your floor income. Step 2. Audit the EP20 system against the floor. All automated transfers and fixed obligations must be coverable from the floor. If not, reduce obligations or increase the floor first. Step 3. Open the Income Buffer Account, a dedicated HYSA at a separate institution, distinct from the EP18 reserve. Label it the Income Buffer. Target, 3 months of floor income. Step 4. Redirect all income to the buffer. Every client payment, every invoice, every deposit goes to the buffer first. Set a recurring transfer equal to floor income on your payday schedule. Step 5. Apply the surplus allocation rule to anything above the buffer target. Reserve, Roth IRA, debt acceleration, lifestyle, in that order. Step 6. Review the floor annually. Recalculate after any significant income shift. The buffer absorbs short-term volatility. The annual review absorbs longer-term changes. Calculate your floor income today. Open 12 months of bank statements or accounting records. Find the lowest single month of deposits. Multiply by 0.9. That is your floor income. Then ask, can the EP20 system run on that number? If yes, open the buffer account today. If no, the gap between the floor and the EP20 requirement is the first problem to solve. Proverbs 6:6-8. The ant stores in summer. It does this because summer is finite, winter is coming, and the store is the difference between surviving both. The feast or famine cycle is not a character flaw. It is a structural feature of variable income applied to a fixed obligation system. The buffer is the structural solution. Calculate the floor today. The complete Covenant Wealth financial framework is now in place. Emergency fund, automated system, debt elimination sequence, variable income architecture. The next video takes a step back and asks the question that sits underneath all of it. What does the Bible actually say about building wealth, and how does every episode in this series connect to that answer? Not the prosperity gospel version, not the poverty gospel version, the complete theologically grounded answer. It is queued up right now.